Hello, I'm Richard Faulkner from the team at Giddos, and today we're going to be discussing real estate's hot topic right now, and that's interest rate rises. And joining me today is Joe Carroll from Sphere Finance. Joe, thanks for joining us.
Thanks for having me.
No worries. So, Joe, the Reserve Bank came out a bit over a year ago and said that they weren't planning on putting interest rates up until 24. We've now seen 10 consecutive interest rate rises. What are your thoughts? Are we going to continue to see any more? What's the word within your industry?
Well, more rate rises. I guess that's the big question. I think the difficulty that we have at the moment is incredibly hard to predict with such a volatile economic environment. If you'd have asked me this 12 months ago, would have assured you that we wouldn't have 10 in a row. So I've got to be very careful here. I personally believe that we are seeing the tail end of these rate rises. I think that considering the instability within the general worldwide banking environment at the moment, obviously you would have seen the collapse of SVB Bank, Silicon Valley Bank in America, and also Credit Suisse being bought out by UBS. It's given people a lot of uncertainty, and there's not a lot of consumer confidence within people in terms of the banking industry in general. I also think if they continue to raise rates like they have previously, they will pile drivers into a recession. So I think it's in the best interest of the economy, the government, and everyone as a whole to probably pull those back. I think at the point we are now, we might see another couple of rises, possibly one or two, but then I think we'll see a pause. There's been strong indications that we'll see maybe a decline at the end of the year, maybe early next year. But as I said, you can't really trust what people are telling you at the moment. We've just got to wait and see, and people have just got to be on top of things, really.
It's interesting. So I guess the conversations that I've been having with people recently is that their fixed rates are coming up to expire at the end of the year, and they're looking at potentially a 4% increase on their current rates. A lot of people are starting to really feel the financial pressure. So what other options are out there for people besides having to sell their family home?
Fixed interest rates are a really interesting one. Absolutely. So when you roll off that fixed rate, the first thing that you want to be doing is calling your bank and speaking to your bank directly, because when you roll off, you'll automatically roll off onto what they give you. And if you don't ask, you don't get. So we're saying to all clients, before we even consider refinancing you, let's approach the bank and say, look, we're looking at leaving. This is what we've been offered. And we'll give them basically a manual of exactly what to say to the bank. This is what we've been offered. We're going to leave. What can you do for me? And what you need to do is you need to ask to speak to the retention team. Because at the moment, a lot of the big banks, especially here in Australia, they have a lot of discretion to retain their customers because they're not getting new ones, because people aren't purchasing as many houses as they were. So they've got a lot of discretion to reprice your home loan down to the most aggressive rate possible. So we're telling customers, have that discussion. And if you need, the wording, you contact us and we can help you with that. If they don't come to the table, that's where we come in as a mortgage broker, and we start to have a look around and see who's going to be most preferable for you. It is frightening for people because, as you say, a lot of people's rates are going to double. They could be on the 1.89, 1.99, and your rate's going to jump all the way up to, possibly 5.5%. That's a big change, a big change. Another thing that you need to consider is if you do look at refinancing, you can stretch your loan term back out to 30 years. And in doing that, it improves your cash flow position because the weekly repayments are less the longer the loan term. And that might be something that's really important to people. We have quite a few families at the moment, they've been offered a really good rate by their bank, but they can't get that 30-year loan term with that bank. So we looked elsewhere and put them with a bank that will give them the 30-year loan term, and it's reduced their weekly repayments, improving their cash flow. And that's what it's all about for a lot of families. How are we going to survive week to week with these raises?
Absolutely. There's some really good tips. What about people that have recently just started a business? It's always been historically a bit more challenging for self-employed people to get finances. Is there any options out there for people that have started businesses in the last couple of years that are looking to either refinance or even purchase a new home right now?
For new self-employed people, surprisingly, the banks have actually loosened their policy for this. So it used to be that the only option for brand new self-employed people that under 2 years was basically looking at low doc options and looking at lenders, your non-conforming lenders like Pepper and La Trobe and Liberty, which have their place, excellent banks for what they do. However, a lot of the majors now have opened up new products to newly self-employed people. They'll take 18 months, but they'll also take, for example, a big policy that's come across a lot of the larger lenders at the moment is they're giving the discretion to the client, say, well, look, if you pay yourself a wage and you provide us with a payslip evidencing that you pay yourself that wage, and also an accountant's letter to state that you can continue to do so whilst operating profitably as a business, then they'll do the loan based off that instead of tax returns. And for a lot of people, for the way in which they structure their company and their business and their payments, this is a really, really good option for them. So we're seeing a lot of that at the moment, which is really encouraging that the banks are doing that as well.
Now, I guess on the other side of the coin is that there's still plenty of buyers out there. Buyers are still looking to get into the marketplace right now. And I guess historically interest rates are still quite relatively low. I guess the difference is that people are now financially preparing themselves with the current rates. If we look at, say, first home buyers who are having the challenges of rentals increasing, rental prices increasing, plus cost of living increasing, them trying to save a deposit, what sort of options are available for them to get into the market sooner?
For first home buyers at the moment, there is a plethora of options, and it's actually never been better for first home buyers. Firstly, as we know, we've got the stamp duty exemption up to 650,000, but then after that, now you've got the option of paying a property tax all the way up to 1.5 million. That property tax means that you don't need to save the entirety of what is essentially 4.5% of the purchase price in stamp duty, which is massive. That's a huge amount of money that people have to save. And this property tax, where you pay 0.4% of the value of the land each year, means that people need less of a deposit to get into the market, even at those higher values up to 1.5, as I said. You've also got numerous government schemes available. A really popular one that I'm doing a lot of at the moment is the First Home Loan Deposit Scheme, whereby you only need 5% deposit and you don't pay any lender's mortgage insurance, which is a massive saving. But what people don't realise is you're paying interest rates as if you had a 20% deposit. And that's huge savings, because traditionally with a lower deposit comes a higher interest rate, which makes it quite difficult, especially for first home buyers. So this new scheme that they've brought in, they've had it for a couple of years now, but there's plenty of spaces still available. So I definitely encourage people that if they think they're not quite ready and they've only got a small deposit, get in touch and have that discussion. We also do a huge amount of guarantor home loans, and that's family guarantee, where we're using equity from a guarantor and their property to help secure your first home. And as we know, through COVID, we saw a huge property boom in prices. So there's a large amount of equity in these homes that people have already established their home, and we're using that to get their children into the market, which is a really, really good option as well.
Brilliant. There's some really, really good options there. So Joe, thanks very much for joining us.
Pleasure, no worries.
I'll be putting Joe's details at the bottom of the video. So if you find yourself in this situation where you need some assistance or guidance in relation to financing, please reach out to Joe. I'm sure he'll be happy to help. Definitely some of those key points that we were able to take out of today was obviously there is potential that there might see some more interest rate rises, but the Reserve Bank is looking at easing them off. There is opportunity out there or options out there for buyers that are coming out of their fixed rates to get into a more manageable home loan. And there's opportunity out there for first home buyers and self-employed people as well. So thank you so much for joining us, and look forward to seeing you next time.